Listen, if you're a small silver investor watching this right now, what I'm about to tell you could be the difference between making life-changing money and getting completely wiped out. Silver just did something absolutely insane, and you need to understand what's happening behind the scenes. Because retail investors like you are being set up for a shakeout right before the real explosion begins. Silver just shattered $95 per ounce for the first time in human history. That's a 230% gain since the beginning of 2025. And while everyone's celebrating, the big players are preparing to shake you out of your position. But once you understand their playbook, you can turn their game against them and position for what market experts believe could be a move to $150, $200, or beyond. Disclaimer, we're sitting just 5% away from $100 silver. And here's what small investors need to understand. Once silver crosses triple digits, everything changes overnight. Suddenly, silver is making headlines on every financial network. Your coworkers start asking how to buy it. Wealth managers who've ignored precious metals for decades scramble to add exposure. That flood of mainstream capital could send prices parabolic. But here's the trap. The big players know this too. And they're going to try to shake you out before that mainstream wave hits. They want your silver at $75 or $80 before they let it run to $150. Don't fall for it. There's a supply signal they are hiding from you, and I'm about to reveal it. So let me show you something the mainstream media won't tell you. Silver lease rates are climbing right now. That means even at $95, all-time high prices, physical silver is still tight and hard to get. Think about that. In a normal market, record prices bring out sellers, but that's not happening. Industrial users, strategic buyers, and nations are competing for limited physical metal, and the pool isn't getting bigger fast enough. Market experts point out that this kind of supply-demand mismatch doesn't resolve with a small correction. This resolves with a major repricing event, potentially much higher prices, and this is exactly where small investors get destroyed. Right now, even as physical silver is tight, we're seeing paper selling in the futures markets. This looks scary and contradictory, but experts want you to understand the critical difference. The paper market is where speculators trade. They don't want physical silver. They want price exposure. When margin requirements spike or algorithms flash red, they sell regardless of fundamentals. The physical market, that's where real buyers operate. Industrial users stockpiling for AI and solar panels, wealthy families accumulating bars and coins. And here's the key. The paper market can create temporary price drops, but it cannot create physical supply. And when paper games hit physical reality, physical wins every time. So when you see a scary 15% drop, and it's probably coming, you need to ask, has the fundamental story changed? Are whales suddenly not buying? Have industrial applications disappeared? If the answer is no, that drop isn't a warning, it's a gift. Most small investors do exactly the wrong thing. They hold through the rise, then panic, sell on the drop. They hand their silver to smart money at exactly the wrong moment. Don't be that person. But how will they actually force you out? Well, let me show you exactly how they engineer these shakeouts, because once you see the pattern, you'll never fall for it again. First, they let price run up, retail gets excited, leverage builds, then boom, exchanges raise margin requirements by 30-50% overnight. Leverage traders can't post the new capital, so they're forced to sell. This triggers stop losses, which creates more selling, which triggers more stops. You get a cascading crash that can drop silver 15-20% in days. Headlines scream silver bubble bursts. The media brings on experts saying the top is in. Social media fills with panic, and small investors who don't understand what's happening sell in fear. But here's what experts point out. These shakeouts don't change fundamentals. They don't create supply. They don't reverse whales buying. They just transfer metal from weak hands to strong hands. And here's your defense. If you own physical silver, actual coins and bars, you face zero margin calls. Nobody can force you to sell. You ride out any manipulation completely unfazed. That's why positioning matters more than timing. And here's the most important piece of news from today. Small investors need to know. India just imported almost $6 billion worth of silver in 4 months. That's a 400% increase from last quarter and 64% above the previous peak. To put this in perspective, India used to import $1.5 billion of silver per year. They're now doing that in a month. Why does this matter to you? Because India is telling you, with billions in action, not words, that they believe silver is going much higher from here. You think a nation of 1.4 billion people deploys $6 billion into silver if they think it's topping at $95? And here's what's driving it. Jewelry, investment demand, and massive industrial demand from solar manufacturing. India is building enormous solar infrastructure, and silver is irreplaceable. This industrial demand has to be met regardless of price. But there's more. India's Nifty Metal Index is having its best start to a year since 2018. The metals to broader market ratio is at an 11-year high. Indian investors, among the world's savviest precious metals buyers, are piling into metal stocks because they see what's coming. For small investors, India's buying spree is your confirmation that you're on the right side of this trade. But all of this is just the tip of the iceberg. Gold just hit $4,700, up 78% in a year. And if you think that's just trivia, you're missing a massive signal. Gold and silver move together in bull markets, but silver typically outperforms. Right now, the gold to silver ratio is around 49 to 1. In historical bull markets, that compresses to 30 to 1 or lower. Do the math. If gold stays at $4,700 and the ratio hits 30 to 1, silver goes to $156. At 25 to 1, silver hits $188. But gold doesn't have to stay flat. Market observers believe gold could push toward $5,000 or higher given geopolitical chaos. This is why you cannot panic out at $95 just because it feels high. The math suggests we could be less than halfway through this move. But here's what makes this different from previous cycles. The geopolitical situation is deteriorating in structural ways. Fresh tariffs on NATO allies, a British MP calling US policy international gangsterism, Canada making independent trade deals with China and backing Denmark over US interests. These aren't temporary headlines. These are generational shifts in global power distribution. Market analysts point out that this isn't like 2011 when silver spiked on speculation then crashed. The current chaos is structural and likely to persist or worsen. For small investors, this means silver has a fundamental floor from safe haven demand, completely separate from industrial or investment demand. And you're getting paid to hedge an increasingly unstable world while simultaneously benefiting from industrial demand growth. One market observer just said they believe double-digit gains in silver miners are incoming already today. And here's why that confidence exists. Mining companies that produce silver at $20 per ounce see profits explode when silver hits $95. That operational leverage means earnings can grow 300% to 400% or more, driving stock prices up at multiples of the metal itself. But here's the opportunity. Many silver mining stocks are still priced for $30 to $40 silver, not $95. The market hasn't repriced them yet. As earnings reports reflect actual cash flow at current prices, analysts will be forced to dramatically raise targets. For small investors with appropriate risk tolerance, quality miners could deliver 200% to 300% gains or more when silver moves from $95 to $150. The key is selectivity. Strong balance sheets, growing production, competent management, stable jurisdictions. And size appropriately, mining stocks are more volatile than physical. Market analysts identify several potential catalysts that could send silver dramatically higher. A physical supply squeeze where COMEX can't meet delivery demands, $20 to $30 moves in days. A major currency crisis driving global flight to hard assets. Small investors worldwide rushing into silver as the most accessible precious metal. A central bank announcing silver reserve accumulation, legitimizing silver as a monetary metal at the institutional level. A breakthrough in battery or other industrial applications, strengthening the industrial case just as investment demand surges. Regulatory changes restricting paper market manipulation. Swift repricing if authorities crack down. You don't need all of these to happen. Anyone could drive silver well into triple digits, and the probability of at least one triggering seems very high. So here's what small investors should do based on everything we've covered. If you don't own physical silver, start accumulating now. Don't time the perfect entry, dollar cost average over the next few weeks. Buy what you can hold for years. Avoid leverage at all costs. Margin and futures are how small investors get wiped out in shakeouts. Only invest what you can hold through volatility. If you're in mining stocks, review your positions. Quality companies or speculative junk, appropriate diversification, sized for volatility. Adjust now if needed. Prepare psychologically for a shakeout. It's probably coming. Have a plan in advance to use it as a buying opportunity, not panic. Ignore the noise. Media will declare the top multiple times. Social media swings from euphoria to despair. Focus on fundamentals. Supply, demand, industrial applications, geopolitical drivers. Track what matters. India's imports, COMEX inventory, lease rates, gold to silver ratio. These tell you if the bull thesis remains intact. Take profits if you need peace of mind. If 20% to 30% off the table helps you sleep and hold the rest, do it. But don't sell everything. Experts believe we're potentially early in this move. But the bottom line is, do not let them shake you out. You're sitting on one of the best positioned trades in the market. Silver at $95 isn't overvalued according to fundamentals. It's potentially still undervalued relative to supply shortage, industrial demand surge, and geopolitical chaos. India is buying with billions. Smart money is accumulating. Mining stocks are positioned to explode. The gold to silver ratio suggests massive upside. Lease rates confirm physical tightness. Every fundamental indicator is bullish. But the big players know most small investors will panic at the first shakeout. They know retail gets emotional. They know you'll sell on a scary 20% drop, even though nothing fundamental changed. Don't give them that satisfaction. Don't be the person who sells at $75 in panic, only to watch silver rocket to $150 2 months later. The choice is yours, but don't say you weren't warned about what's coming. Both the shakeouts designed to scare you and the potential upside that rewards conviction through chaos. Silver at $95 isn't the end. According to experts, fundamentals, and smart money positioning, it might just be the end of the beginning. Don't let them shake you out. The game is rigged, but now you know the rules. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important silver update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.